Throughout the country, thousands of historic buildings have become successful renovation projects thanks to a critical financial tool, historic tax credits. This tool has been the difference between a stalled project and a completed project. It's turned liabilities into assets, eyesores into landmarks, and forgotten places into memorable destinations, much like the building we're in today. If you own a historic building and are considering renovation, here are a few reasons why historic tax credits can be really beneficial for your project. First, they close the gap. Historic tax credits can make the project financially feasible, allowing it to move forward. Second, they reduce the risk. By adding tax credits to the capital stack, it lessens the need for equity and the overall loan amount. Third, they pair well. The tax credits are compatible with most other incentives such as tax increment financing and facade improvement programs. Finally, they're versatile. You can claim the credit for yourself to reduce tax liability or bring on a partner who can use them instead.
There are two types of credits, state and federal, and both are a credit on income tax. Many states have a tax credit ranging anywhere from 15 to 25%, and the federal tax credit is 20%. Put them together and you're looking at a large percentage of project costs being eligible for historic tax credits. The first step is determining if your building is eligible. For both the federal and state credits, in most states, that means it must either be individually listed on the National Register of Historic Places, considered a contributing building within a National Register Historic District, or be a district certified by the National Park Service for the purposes of this program. Once you've determined your property is eligible, it's important to know the program requirements. Let's cover a few of the important ones. First, the project must follow standards that have been developed by the Secretary of the Interior. This applies to both exterior and interior work. Second, the property must have an income-producing use once it's been redeveloped, such as a restaurant, apartment, or an event space. Third, you have to spend enough on the rehabilitation. This program is for major renovations rather than for small repair projects. Finally, we recommend that the work for the project be approved prior to starting by both the State Historic Preservation Office and National Park Service so you don't risk losing the tax credits.
The historic tax credits can be applied to qualified project costs. This includes hard costs, like demolition and construction within the building envelope, soft costs, like legal fees, architectural and engineering fees, the developer fee, and more. So what difference would historic tax credits make toward the cost of a typical project? Here's an example. Let's say your project is located in Illinois, and the total development cost is $2.5 million, $2 million of which includes qualified expenses. Of that $2 million, your project could receive up to $900,000 total in historic tax credits, with $500,000 in state credits and $400,000 in federal credits. The credits can't be applied to every expense. For example, costs related to buying the building, additions such as rooftop decks, and non-fixed items like furniture don't qualify. But with the tax credits covering a variety of project costs, you can see how this can become a viable financial tool for your project.
At Studio GWA, we've been fortunate to work with clients for over 4 decades on historic renovation projects. Our team of historic tax credit consultants, architects, and designers makes us a one-stop shop for navigating every phase of your project, including the first, making sure it's financially feasible.